Well, here we go, we're in the peak of earnings season. There's a lot of news going out there in the stock market at the moment. So today what I thought I'd do is I'll cover 4 of the biggest news stories that I've seen in the last couple of hours. And yeah, these are a lot of stocks that I'm interested in or own, so I hope you enjoy the updates and we'll get started. So it's getting really busy out there. It's really hard now to keep up with making videos, doing the conference calls. It's been really busy, and typically what always happens when I get really busy is work comes to me and say, do you mind doing a little bit of overtime? Now, I don't mind doing a bit of overtime. It's a bit of extra money, and obviously I enjoy my job at the same time. But I gotta tell you, of all the typical weeks where it comes for that overtime, it's when it's already busy enough trying to do these videos, trying to do all the conference calls, and then even more work on top. So I am sorry about the delay of getting everything out, whether it be on the YouTube or on the Patreon. I am very slow at the moment because there's just so much going on, but hopefully I'll sort it out in the next couple of days. Anyway, let's get on to these 4 stocks and these 4 updates. So first of all, talk about Card Factory. Card Factory had a pretty decent day, up 8%, but I'm not going to lie, I expected it to be a little bit more than this. I expected it to be a little bit more, like over 10%. I thought we might even see push to 20% on the upside. I was a little bit disappointed on the Card Factory. Obviously I'm happy that it's up, but I generally thought the move would have been bigger. The update that they brought out today was absolutely fantastic, and yeah, I just don't think Card Factory is getting fairly reflected on the share price for how good this business is doing at the moment. Obviously 7 times earnings at the moment. I've owned this stock for probably around about 4 years-ish right now, and I could be up over 164% from my original buy, but I keep averaging up on it. I just see the financials improving, and I just see the share price not really following the financials. I think it will do at some point, but at the moment it's not doing it, and that definitely increased today because the recent financials that Card Factory just brought out were fantastic. Revenue up 10%. You know, this is supposed to be a stable 2-3% growth a year kind of business. EBITDA was up 9.5%. Profit before tax was up 25%. Obviously, the really frustrating thing is the tax hikes that we've had on businesses at the moment. I mean, imagine what it would have been without all that. Net debt was down 39%. So the debt now sits at 34 million. The balance sheet has really expanded massively. Really good balance sheet coming on here. So Simple Wall Street needs to update that balance sheet as well, by the way. Basic EPS of 14.4 pence. That was an increase of 11%. And look at that, the dividend is back. It came at 4.5p. Now, potentially we could see this dividend hiked up a little bit more in the future. I thought the dividend would be personally a little higher than where it is right now, but it was in the range that Card Factory did give. And I think that it's best to start off small and then start hiking up that dividend. So I like this buy management team. I like that they are being a little bit conservative on that dividend and then build it up. I think National Express could potentially take something from their book about how to do that. But yeah, 4.5p dividend. Obviously, without the share price jump today, that would be around about a 4.5% dividend yield. It'll be a little bit lower now because of the share price today. But yeah, I think this is really good. Now you've got a really good balance sheet, a company trading at 7 times earnings, 4.5% dividend yield, and you know you've got a company that's growing at 10+% with EBITDA up 9%, EPS growing 11%. Really, really good numbers. And like I said, I think this company should be trading higher than this. I think that 7 times earnings for this business is way too low. I think that even if you put it at a discount to the market of, let's say, 15 times earnings, I mean, it should be a £2 stock. So, I mean, if we got even lower than that, an even bigger discount, I can't find anyone that would make a negative case against Card Factory because they just keep smashing it. It's about time the stock did go above that £1.50 range, in my opinion anyway. SoFi have brought their numbers out, and as I said on the Monday video, is that I expect the stock to move. I expect it to probably move over 10%, and I thought I was going to make this video talking about SoFi moving up 10%. Now, what actually happened is it's actually moved down 10%. So it was actually up in pre-market, and then it swung negative, and it just kept going. I mean, yesterday we were down around about 13%, and then today we were down around about 17%. The stock has started to come back a little bit as the day has gone on, as you can see here, but another red day overall, and yeah, it's had a big fall off in the last couple of days. So yeah, I said it would be volatile, but I'll be honest with you, if I saw the numbers that SoFi did, I didn't think it would be down. I thought the stock would be up. I've got the quick summary of numbers here: beat by revenue, beat by the guide, beat EBITDA, beat on EPS. The next quarter was a little bit light. That's fine. I'm not really bothered about the next quarter. The big thing is the annual guide. The next quarter is probably just managing expectations. They raised the annual revenue guide, they raised the EBITDA guide, and they raised the EPS guide. So we had a triple beat here, which is absolutely amazing. and the numbers were just so impressive. You know, you look at the revenue growth, that was 26% year over year. I think we were expecting 20% revenue growth or whatever it was that we showed yesterday. Members, I mean, the members are still growing at 43%. Like, at some point this will slow down, but even when it slows down, they've got all the ability to cross-sell all the products to other members. That's still impressive. And all the profitability margins as well were moving massively in the right direction as well. So I was shocked because there was so many good beats in here, so much good news going on here. The valuation now is looking really attractive. Obviously, I've been a shareholder in SoFi for around about a yearish now. And I'm surprised to see the stock only at these sort of level. I started buying around the $4 range, and I thought it was in very good value there. And I think anything below a $7 is definitely a really good value on SoFi, and I think it's undervalued under $7. So yeah, I couldn't believe it when they brought these numbers out and the stock dipped. I did buy more. I'll let you know that right now. Tesla, I got a few comments in the comment section about Tesla because there's a few people cheering, going, "Oh look, the stock's up. It had a good day yesterday. I think the stock was up around about 15%. Today it is starting to give some of it back, which it probably will do because it was a bit of an artificial jump really. So but yeah, it was funny because I got a lot of comments going, "Look, Tesla's up," and I saw it with like YouTubers. I saw like Jeremy Financial Education. He was like, "Oh, well done to all you Tesla longs." It was like, chill out, mate. Like, year to date, you're still down 25% year to date and massively underperformed the S&P 500. Let's chill out a little bit. And it made me laugh that as soon as we had one positive day, everybody was out there going, "Look, it's amazing." And it's like, no, calm down. But there was some news out there. I mean, it was good news. They did secure a deal with China's Baidu, and that gave them access to their maps. They need to have these maps to have their FSD. So a little bit of a step in the right direction with FSD, and it is positive news for the longer term. However, do I think it deserves a 15% jump? No chance. I think it probably deserved a good 3 or 4% jump, but nothing like this. Something like this sort of jump deserves to be probably full self-driving, actually allowed in every country. Like, for me, it was a bit of a unnecessary jump, and I would expect the stock to give some of it back in the next few days. I mean, realistically, let's look at the fundamentals here. Financially, they're still coming off a terrible report with a big EPS miss, revenue miss, a big decline in revenue, and this is, for me, it's still, I mean, this is the stock market summed up. The fact that Tesla have come out with this EPS miss and this revenue miss, and since that time frame, the stock is up whatever it is up, something like 30% since its earnings date, and then you got something like SoFi that came out with like triple beats on its results and then triple guidance raises as well, and since that time frame, you know, that stock is down something like 16%. That's the stock market, guys. Absolutely crazy to see from the stock market. PayPal. I mean, PayPal today was up 1%. Well, is up 1%. It was up a lot more in pre-market. This was up over 5%, and it's given a lot of it back. I think maybe some of the reason why is maybe because the S&P is not having a good day. The S&P is down around about 1%, which is maybe what's kind of pulling it down here. But I mean, when you look at the S&P, it's up 6% year to date, and if you do look at PayPal, it does put PayPal up now 10% year to date. So a lot of people keep saying PayPal's doing nothing, but it's outperformed the S&P 500, and 10% so far this year isn't terrible. So there's a bit of life going on there with PayPal, and I've got to say, I've not gone through the full earnings yet. For you guys on Patreon, I will get around to doing the full earnings from last week, and then I'll do a review of this week's earnings on Patreon. So I've not gone through the full earnings yet. I had a quick scan through the numbers, and I thought the numbers looked pretty impressive. They beat on the revenue. They beat by the revenue by 2.4%. Total payment volumes, it increased by 2.8%. EPS, there was a lot of changes going on in the EPS numbers, but on a GAAP EPS, they beat by 0.5, and on the guide as well. On the new stock-based compensation EPS, so you can see a little bit down here, they changed how they include stock-based compensation and a few other things. They beat by 0.18, and on the other guide, they beat by 0.23, so that was really nice as well. They raised the annual EPS guide as well, and they maintained their apples to apples EPS, as you can see here. Next quarter Q revenue was down by 0.6% and was a slight miss there, but nothing to worry about because, like I said, I said it with SoFi, we don't really care what's happening in the next quarter. Our big thing is for the end of the year, and the other big thing is profitability, and that was raised. That was the most important thing. But total payment volume up 13.9%. That's really good. Venmo total payment volume was up 8.5%. Revenue was up 9.4%, and overall the numbers look pretty positive. So yeah, as a PayPal shareholder, I was pretty happy that Alex Chriss seems to be starting to move that company in the right direction, and yeah, it looked okay. So as a PayPal shareholder, I was happy. I was a little bit annoyed that the stock wasn't up. Well, it was up. I'm a bit annoyed that it didn't hold it considering these results, but yeah, everything's moving in the right way, and I'm happy to carry on holding the shares. So yeah, I'll probably give PayPal earnings probably a solid 8 out of 10. There was definitely room for some improvement, but at the same time, it was the green shoots are there anyway. So yeah, overall, a lot of updates out there. Card Factory, I thought theirs was a 10 out of 10 update, and I'm surprised the stock isn't up more. SoFi, I thought theirs was a solid, probably 9 out of 10 from what I've seen so far. Obviously, I've got a few things to go through, the full earnings and the conference call. Really surprised to see that one down, and PayPal I thought was a solid 8 out of 10, and yeah, shame we didn't hold them gains a little bit more, but everything's moving in the right direction, and I guess overall it's still up 10% year to date, which isn't too bad overall, is it? So yeah, that's the recap of some of the updates today, guys, and on Patreon I will go through them in a little bit more detail for you guys anyway. But yeah, hope you enjoyed it, and well done to any of you Card Factory shareholders. I'll see you in a bit.